All right, guys, Idiot Investor here. It's Tuesday. Just wanted to give a quick update on Workhorse and what's going on. Workhorse had their earnings call pre-market, and even though they missed earnings per share by about as much as you can miss them by, their revenue is up and they secured a 1,500 vehicle delivery deal. I don't remember the name of the company, but it doesn't matter. The price of Workhorse has been shooting up today. My personal recommendation is I wouldn't say to jump on this. Usually there's a big cooling off period whenever things take a run. I think it's just an earnings run and it will come back down a little bit. Jumping on this for fear of missing out is usually like a greedy play that is not going to result in anything but you holding a bag. So I'm not going to change any of my plays over this. But I will explain what it's doing to the put option that I sold. So if you look at the top, you'll see a big jump in the overall account value at $331.94. You'll see it says that it's up $12 today. That might move around while this video is going on, but you'll still see the buying power is still $37.94 because I haven't been moving anything. The account value is a reflection of the overall amount of cash in the account with the movement of our option play. So if we go look at our option, because Workhorse has been going up, the value of this put has gone down. And for us, that's a good thing because we're the writer of the put. So let's take a look at the metrics here. Okay. You'll see right here where it says at the very bottom of the position section, it says total return plus $18. I like to use that one. Today's return can change around and give you kind of a false perception of what you've made. Always use total return. So if I was to close this position right now, I would be up $18. So my overall buying power would go down. I'd get my $300 back, but that 37 would be whittled down by $6 because we got 24 for this. And that's the point. So you'll see the current price, the market value, 6 cents, $6. They're the same thing. The market value is counting all 100 shares. So you'll see that it says negative $6. $6 is the price that we would have to pay in order to buy our way out of this contract. Okay. If we let it run to expiration and Workhorse continues to stay above $3 a share, we'll gain another $6 in overall account value when this expires. But we've already been credited the full cash amount anyways. The only thing that would happen is we either get our cash back or we get 100 shares of Workhorse for $3 a piece. Okay. But if you want to see what it would look like if I were to buy out of this, I could show you a hypothetical. I don't like to do hypotheticals too often. I know people like to see the live trades. There's a lot of people out there doing hypotheticals, but in this case, I'm not going to buy out of this position. I'm not going to make a greedy play, so I'm just going to show you if you wanted to take your $18 and run, how you would do it, okay? The normal way would be go to trade, view all options, go to the same expiration date, and then you'll see that it says right where the share price is in the middle here, that $3 put option, you'll see that -1. That's because we've sold one contract. If we were to purchase an option contract, it would say +1, but that's not a strategy I use very often. So you'll see where it says -1. That means you have to do the opposite in order to get out of that contract. So if we wanted to close that position, take our $18 in profit, sacrifice the remaining $6, then what we would do would be to change the settings to buy a put, and then we would choose the position. And you would just review it and it would close your position out. And then you'd have nothing left. You would lose $6 in credit and you'd get your cash back, your collateral that was taken, and the account would the buying power would lose $6 of overall value. All right. So that was just a quick update. Workhorse had a good earnings call minus earnings per share. We're not going to make a greedy play on the run-up. It may continue to go up, but 90% of the time, that's my opinion, after a big run-up like this, there's a long cooling off period. People sell, take their profit, and FOMO is what leaves people holding the bag. So we're going to go ahead and just hang on to our contract, but I wanted to show a little bit of that fluctuation in the contract value. So thanks for watching, guys, and I'll see you on the next update.